Yo, boys, what's up? It's Dawson. We're gonna be going over fair value gaps again. Some of you guys have been struggling with it, so I'm here to help. This is gonna be my first YouTube video, so there's gonna be more to come. But for now, it's probably gonna be a little bit more on the lower quality side. But we have a bunch of new stuff coming in that's really exciting. Um, for some of you guys that are even wondering what a fair value gap is, that are newer to trading or really haven't experienced it yet, um, and a fair value gap, as you can see on my screen right now, is a void of liquidity. Um, it creates possible price points the stock is going to retrace to. It's an imbalance in the market. In this little box area on my screen, I've already marked out a few fair value gaps. There are no opposing sell orders or buy orders, depending on which way the stock is going in this area. In this case, there are no sell orders from the top of this box right here to the bottom of this box right here. What that causes is an imbalance. That's not normal. And when we get an imbalance like this, what does price want to do? Price wants to fill that imbalance. So in which way is it going to fill that imbalance? By filling the fair value gap. As on this one, the imbalance hasn't been filled yet. This isn't a 1 hour time frame, so it do take a lot longer to fill. But if we do scale to here, we get an imbalance, same exact thing. We get a fill almost all the way to the top, get a fill, and then a rejectment straight down. Here again, we get an imbalance, get a fill, retrace straight back down. Again, right now, as we're speaking, Friday, May 16th, on gold, we have a fair value gap filling and already showing signs of rejectment. As of here, here's another great one. You get a fair value gap, get a wick down, respect the fair value gap, punch up into another fair value gap, and then get rejected off that fair value gap perfectly, creating a third fair value gap right here, fourth one right here to respect. The next one we are going to be seeking out would be this fair value gap at this time. As for using the fair value gaps when trading, you can take entries off them. That is totally fine with me. It is more of an aggressive entry, but if that's what you're looking for, that's totally understandable. Let's go in here and let's look at some more things. So this is a perfect fair value gap filling right here. This is exactly what you want to see in a trade. So when you're in a trade, you're probably wondering, well, why do I need to know where it's going to retrace to? Well, number one, you can take an entry off it. I don't recommend it fully, but you can take an aggressive entry off it. Number two, you can understand where price is going. If I am in a long, and my long position, or my short position, starts here, and I'm trailing my stop loss, and I'm already up this much money down here. I'm already up 1,000 at this point right here. And I need to know, okay, I want to move my stop loss to, a little bit of money. I want to protect myself. Okay, I have a fair value gap. Okay, as you'll get more into trading, you'll understand what an inverse fair value gap is. But for now, we're just going to cover the fair value gaps. If you get an inverse fair value gap, it shows a trend switch or a weakening in the trend. So if you're in a position and you want to cover yourself, where am I going to put my stop loss? Normal traders are going to put the stop loss in a downward trend like this, maybe right above the previous candle. What's going to happen to them is when it retraces in this fair value gap right here, they're going to get stomped out and miss all the profits they could have made with continuing of the trend. Now that we are more experienced traders, we see the fair value gap coming, we put our stop losses right above the fair value gap. So just in case it gets rejected here and inverses, it'll stomp us out. We don't lose any money. We still get the win from here to here. But if it rejects and continues to trend downwards, we get a much longer, much bigger win, clearly. So fair value gaps are great for that. I do see some of my students, they will use them as entries. If we are in a downwards trend, everything's pointing down, the bias of the day is pointing down, and we are creating lower lows, lower highs, and we have a fair value gap that it retraces into like this, I do see some students, as soon as they see a rejectment and a close back outside right here, they do take the trade off that, which is totally understandable, totally fine. I do like to look for more confluences, obviously, to pair it up with it, but it is a great way to get an aggressive entry. Let's scale back over to here. Let's scale down to the 1 minute time frame and find some fair value gaps live with you guys right now. Here's a perfect example. boom, for value gap fill, rejects perfectly, and we continue the trend upwards. Normally that's not the most ideal for value gap, but it does happen. We actually do have a much better one right here. That one's not that good either. Scratch that. Anyways, though, I do want to talk to you guys about time frames when you're using it for value gaps. Something I see a lot of my students do, which I get super mad about, is they will find a 4 hour for value gap, mark the 4 hour for value gap, and then be on the 1 minute time scale and see, it retracing perfectly into it. They'll see a close on the 1 minute outside of it, say, okay, it got inverse, and then they'll take a long or a short. I'm like, what the heck? I'm like, why are you doing that? Like, well, it's an inverse for value gap. No, it's not. The 4 hour could look like this still. The 4 hour will be closed inside of it by the time there's still 3 hours for that candle to close. So whatever time frame you guys are on, if you guys are on the 1 hour, you guys are on the 1 minute, you guys are on the 4 hour, you guys are on the daily, whatever time frame you guys are on, the fair value gap must fill on that time frame. If it gets rejected, closed outside of that time frame, totally fine. That's an inverse fair value gap. But you guys cannot go to the 1 minute time frame, see a close outside of it, and say, okay, it got rejected, and then close out. That's not how fair value gaps work. We're on the 4 hour right now. Let's see here. This same 1 hour fair value gap is another great point. Is look for higher time frame fair value gaps. Sometimes they're stacked on top of each other. Another example right here. If you were on the 4 hour, you would have saw this fair value gap, this imbalance, and say, hey, it got rejected. But if you scale down to the 1 hour, you would have seen that the fair value gap was up here. So be checking different time frames. Some time frames have way better entries than other time frames. Like I said, don't take your fair value gap off the entry, but it is a great point, a great confluence to know. You can't really trade without it. It's a great way to understand where the market wants to go, where price wants to go, and where where it's going to end up retracing to. Next video, we're going to be talking about inverse fair value gaps, and I'll go over a lot more on that. But just for this video, we're just going to be talking about fair value gaps. There's not much to them. They're overall pretty simple. I do want to show you guys. Let's go to NAS 100. If we're going to go to the 1 minute time frame, if I were to be taking a trade just off the fair value gap, I'd be waiting. It's actually something decent. I'd be waiting for this fair value gap to fill like this. If you wanted a more aggressive entry, or even this right here is a great example too. We'll use this one as an example. If I was taking the trade just off the fair value gap, I would wait for this to fill, which it did clearly right here. I would see the rejection, which this would be the wick down, it getting rejected off the highs or off the fair value gap. Once I saw the rejection to the downside, I would have entered my short. Clearly, this wasn't the best trend to enter in. I would have put my stop loss above the fair value gap just a little bit, just in case it wicks out and it gets rejected, that covers me. And I would put my take profit at a 1 to 3. So I actually would have won this trade if I would have put it in at that time. But at the same time, it is a more aggressive entry because they don't always work out. As of here, right here, that's an inverse for value gap. I wouldn't even taken a trade off that. Here's another one for value gap that fills right here. Like I said, you can't take a trade off. It's much more aggressive. If you guys are seeing this video today, you guys can look for this for value gap to fill. We are on NAS 100 right now. If you do see this for value gap fill or inverse, you can take a trade off it. It is a larger fair value gap. Scale out to the 5 minute. We still have that fair value gap. Boom, here to here. Scale out to 15 minute. No fair value gap. Okay, well, we have a prominent 5 and 1 minute fair value gap. We could wait for that to fill, get our trade off that. Like I said, though, it's more aggressive, not as good as an entry as obviously like an order block, but it is in that category of retracement such as equilibrium. We are actually shooting to fill that imbalance right now. Maybe we can watch this happen live. Let's see here. Yeah, so fair value gaps, imbalances in the market. The market's going to want to fill those imbalances. How to find them? That's going to be the top of the third wick and or the bottom of the third wick and the top of the first wick. So like I put in our gold, top of the first wick right here, bottom of the third wick, 1 2 3, or if it's bearish in this case, bottom of the first wick, top of the third wick. That's your fair value gap in this area right here. There are no opposing buy orders in this case scenario. If we go back over to NAS 100 and we go to our fair value gap we just marked out, there are no opposing sell orders in this area from here to here, so price is going to want to seek out that imbalance, which it's almost already gone there. Let's see if it seeked it out in the 5-minute. Almost seeked it out in the 5-minute. I'm going to move this up just in case. But yeah, those are fair value gaps for you guys. If you guys have any questions, I'll be uploading more on here. Better quality, better everything. But for now, that's fair value gaps for you. And I hope this really helped you guys out. If not, comment your guys' questions or text me in my Discord, and we'll get everything squared away with you guys. See ya.